Good morning, everyone. Welcome to Pre-Market News and Views by The Money Stocks. Today is Monday, June 24th, 2013. Thank you all for tuning in. Let's jump right into the charts here. We're going to start off with the usual S&P 500 E-mini futures. You'll see that the futures are taking another leg down today, trading lower by 16.5 points at the moment. Now, there are some big levels coming up for the S&P 500 E-minis. First level you want to look at is around 1564. You're going to have a little minor support there. Should that level fail to hold, and I think today is a possibility where it could fail, then you're going to have to look at 1547.5. So there could be some potential downside even from where we are at the moment. However, we do have two pretty decent support levels that I would watch for, especially if you're an E-mini futures trader. 1564, and then after that it's going to be 1547.5. So those are your two big levels that I will be watching for this morning, and we'll see how it plays out. Now, what's the catalyst for this big decline today? Well, there are quite a few things. First and foremost, if you take a look at the Asian markets last night, what you're going to notice is that the Shanghai Composite, which is mainland China, was down over 3%. And really, that's all you need to see. China really taking it on the chin last night, closing below the psychological 2,000 level. Just a very ugly decline. If we flip over to the Shanghai chart, let's see if we have the data loaded up here. We'll take a look on the daily. Yeah, you're going to see this big surge here. A little bit of a pause, and then look at this big, massive decline last night. And that takes it all the way down to what we call a weekly chart double bottom. Those of you interested in this should watch our post last night on the blog, the Shanghai Express, a weekly video I do on the Asian markets technical picture. And we're right down here into this double bottom right now, below the important 2,000 level. So really, China tanking last night, trading down by more than 5%. That is definitely not helping things out here this morning. And again, if you have a weak Chinese market, there are major problems. Now, can this hold a double bottom? That's the big question. Will China hold a double bottom? That is really the question. Now, what's wrong with China? Many of you may be asking. There's quite a few things right now. It looks like China's going through a big problem when it comes to liquidity. At the moment, the central bank, or the People's Bank of China, may look to change its stance on economic policy. But either way we slice it or dice it, their interbank lending rates are soaring, and that's really the problem for the sell-off. So again, if you take a look here at the United States market today, the first thing you want to take a look at before you look at anything would be where are the interest rates on the 10-year note. And you're going to notice that the interest rates on the 10-year note are now up to 2.64%. If you've been watching any of my videos, I think they're ultimately headed a little bit higher. But in any case, there could be some pullbacks between here and there. But either way you slice it or dice it, higher yields are really hurting the stock markets across the world. And that's really all it comes down to. And I think traders should be well aware of that. All right, let's take a look at a few different things out here today. You had in Asia last night, you also had the Nikkei 225 index finish lower by 1.26%. Nothing terrible there, but the Nikkei has been a very weak index either way. If you take a look here at the daily chart, you get a better picture of it, better sense. And nice little uptick, and then a pretty good little sell-off last night, but only down 1.25%. Still got to contend with that psychological 12,000 level. There's still a lot of support there. Then 11,000, then ultimately 10,000. But either way you slice it or dice it, the picture is not a very pretty one, as this could be building pressure to attack that 12,000 level and possibly even break lower. But last night the Nikkei was down 1.26%, finishing just above the 13,000 level. Looking at the Bombay Sensex Index, which is India, that was down 1.2%, 1.25%, or 233 points. The Singapore market, which was the Straits Times Index, down 1.6%. That's a pretty nasty sell-off there. So pretty much all the Asian markets really selling off sharply, and that is definitely having a major effect on the markets today in the United States. If we take a look across the pond into Europe, you're going to see that the FTSE 100 is trading lower by 1.3%. The German DAX down by 1.5%. French CAC 40 down 1.9%. The IBEX 35, which is Spain, down 2.12%. And then you have the FTSE MIB, which is Milan, Italy, that is down 1.2%. So pretty nasty sell-off there, really across the board. And we're getting a pretty nasty sell-off here in the S&P 500 E-mini futures. As you see, they're down 16.5 to 17% right now. So it's a pretty nasty sell-off across the board. I think traders want to be a little bit on the guarded side. Like I said, there will be some support around 1564, and then ultimately all the way down to, I believe, 1547.5 on the E-mini futures. Let's take a look here at just a couple of other things that are out here today that are causing some disturbances. One, we keep hearing more about this Edward Snowden leak, NSA leaker Edward Snowden. The U.S. is on a foot race to try to capture him. He has a lot of support out there too. That's also weighing on the markets at this stage of the game, in my opinion. You also have weak economic data out of Germany. Later today, you're going to have news coming out at 10:30 in the morning. I believe you're going to have the Dallas Federal Reserve, its manufacturing report coming out. So there could be a little, some small market movers, but the bottom line is, and this is the bottom line in a nutshell, it's all about rates. Where are interest rates going? Are the yields on the 10-year bond yield going to soar? Is the IEF, which is the iShares Barclays 7 and 10-year Treasury, going to make new lows? The lower this goes, the higher rates go. And that's all. The only chart you really need to follow is right there. Could look at the TLT if you prefer. Same exact picture. Boom, the lower this goes, the worse it is for the stock markets. And that means that rates are going higher. And that's really all it comes down to. Ultimately, I think rates on the 10-year Treasury are going higher. And you can watch some of the past videos. I actually give out the levels where I believe they're going to go to. So you can see when this market sell-off may come to a little bit of an end. But in the meantime, market is pretty weak today across the board. Looking at gold and silver today and oil, what you're going to see here is that gold is lower today. Gold is trading down this morning by about $11 to $12.81 an ounce. Gold is not really selling off that sharply today. You would think it would be a little bit worse, but it is down $11 and has been in a downtrend since really last week when it sold off very, very sharply. Oil today is down 32 cents. That's light sweet crude. That is the type of crude we use here in the United States. Light sweet crude is trading at 93.36. If we take a look at the USO today, this is trading at 33.07. I think it does have further downside to go. There will be some support around 32.40 though. Let's take a look here at the GLD this morning, which is also trading around the 124 level. Yes, last week it closed at 125.05. So gold is still in a very vulnerable position. Oil is in a very vulnerable position. And as the markets deflate, these two leading commodities do inflate as well. Gold is in a downtrend at the moment. But we'll see if at some point it does become a counter play against the stock market. That it has been known to do that from time to time. Although most of its run since 1999 to 2011, gold did move in an uptrend with the stock market. Stock market and gold were almost synonymous. But these days, the central banks, with all the carry trades that are out there and the stronger U.S. dollar index, it's definitely weighing on the price of gold. You can take a look at the dollar today. Dollar has surged back towards the $83 level, and that's a big, big move in the last 2 or 3 days. So we'll see how that plays out going forward. Traders want to be on guard today. Get ready. It's going to be a lot of volatility out here, and I think it should be a fun trading day. Hopefully, I will see everybody on the charts at 9 o'clock. I want to wish you all a good trading day, and we'll see you a little bit later.